And hello and welcome to episode 77 of the GrowCast Show, one of my favorite numbers, 77. And today with me, I have a lot to learn from Ernest Liew. He's a property consultant. And Ernest, how are you feeling today?
I'm good. Weather has been a bit rainy, but feeling good today.
You're feeling good. Very nice. And Ernest, I want to jump straight into it because property is such a hot topic in Singapore, right? So, Ernest, for you, what is the simplest method to plan for my retirement using property?
Okay, so today a lot of people think that they can earn a lot of money through the stock markets or anything like that, but they don't understand that there's a lot of volatility and they cannot handle that kind of uncertainty in the stock market. So I always tell people, hey, look for something simpler, something more stable. And I always give this example. Today, if you have something like around 900,000 HDB, when you are age 65, will that asset still be with you at only 900,000 fully paid? Or would you prefer an asset that is worth around 2.5 million fully paid? And this is where I can come in and help you to how we can structure your progression, your asset progression from 900,000 right until 2.5 million. Wouldn't 2.5 million give you a lot more options? You can downgrade and have extra cash to retire. And that's how I always say use property to retire.
Makes sense. And for people who are not savvy, for example, I'm not savvy in the financial markets and I'm relatively risk averse. So can I just use property to enable me to retire comfortably?
Yeah, of course. Like what I said before, if you have something worth $900,000 today and you want to bring it to a higher quantum, there are steps which we can help you to do. And a concept which I share with some of my clients, I call them the 4 Ps concept, where we have a 4 Ps that come together to help you to afford a property from a smaller quantum to a higher quantum. And again, if you're stuck with a $900,000 HDB at age 65, fully paid, do you have a lot of options? Versus if I bring you to something worth 2.5 or 3 million, fully paid at age 65, wouldn't that give you even more options? And I always tell people you can easily downgrade back to a $700,000 HDB and you have a lot of cash to spare. You can buy a second investment property. You can also use that for holidays or just spend the money. And that is the retirement plan that I always share with people using property.
Makes sense. And Ernest, whenever I see, a lot of profitable condo investments, right? So when it comes to property, there's so many extra expenses such as the loan interest, such as the stamp duty, such as the agent fees, right? So this can take up quite a chunk out of the gross profit. So when I take this into account, is property really that lucrative of an investment class?
Yeah, okay. A lot of people ask me these questions. Because right now in the market, every agent will tell you, hey, buy this, buy that, you get 300,000, 400,000, 500,000 profits. But yeah, the people who are a bit more savvy, they will look into these little costs that are involved. But I always tell people also, on the other hand, if we look into all these nitty-gritty like the commissions, the stamp duty, the maintenance, the loan interest, then property may not look so lucrative after all. But then we ask the question, how is it that so many Singaporeans are able to upgrade from their BTO or their 2-bedder? They can go up to a 3-bedder, 4-bedder, or even some can go up to a landed. So, and again, is this 4 Ps concept that I will share with my clients. And these 4 Ps consist of your personal promotion, your property savings, your personal savings, and the property appreciation, which sometimes can be just a bonus. But end of the day, if these 4 Ps come together, and if I help you to structure your property growth along the way, you will find you will be able to move from a BTO, from a 2-bedder, up the higher quantum ladder and to a bigger property, and you can retire with a bigger property.
Nice. And, for Singaporeans, Ernest, Singaporeans who are in their 40s and 50s, right, there's always that fear of losing their job, always that fear of getting fired. So how does someone mitigate the risk of being jobless halfway and not being able to service their loan? So is it better to get a smaller quantum or is it better to go for a higher quantum?
Okay, this is a very interesting question. I mean, truth be told, I think I've got a lot of friends who, at their 40s or 50s, suddenly they lose their job. But does that mean they cannot embark on this journey, right? Because if you've got the loan, you've got the down payment, why not, right? And I actually did a calculation for a couple in their 40s. If they bought a $2.5 million property with a 25-year loan, and believe it or not, if your CPF is coming in quite regularly, you find that from the time you purchase, and I'm talking about a new launch, from the time you purchase from your progressive payments onwards, that means your next 25% onwards, your CPF can nearly pay up your monthly installment. That means you don't have to take out any cash from your pocket. And this can go on right until you get your keys at TOP. In other words, for the whole 3 years of construction, you don't have to take out any cash from your pocket because your CPF can actually pay up for the monthly installment for property under construction. Now, isn't that very helpful? Isn't that safe enough for you to be able to purchase something that is so big, a quantum, but not affect your monthly cash flow?
And also, Ernest, it seems that the prices in the suburbs and city fringe have gone up quite substantially, especially in the last 2 years, right? So it seems to be creating a very narrow gap with the prime location property. So are properties in the prime areas now more reachable to average Singaporeans?
Oh, that's a very good point. Because I think for the longest time, if you see, if you're coming from like the OCR, if you all understand OCR, outside central region, and RCR, a lot of people, I think they have this goal of, one day my dream is to, stay in Orchard and, buy a property in Central. But because of the price gap all this while, it has been nearly an impossible thing to do. But today, as we can see, prices in the rest of Central region and even outside Central region, they are hitting like from the numbers of 2,700 PSF to 2,009 or even 3,000 PSF. So today's buyers are going in for these launches at these kind of prices. But if you look at the core Central region prices, now for the longest time, the gap was very big. But today we are at the narrowest gap, I think, for the last 30 years. And you can see that those who enter these new launches today, when they sell in 3 to 4 years' time, maybe some of them could accumulate enough cash proceeds and sales proceeds for them to be able to upgrade to something in the Central. So I think this gap has been narrowed. I think the opportunity arises maybe in the next cycle of this property market.
Yeah, there's always cycles in properties, right? And if we are starting out our property journey as a young couple today, is it a reasonable goal to hope to be able to own a piece of Bukit Timah or Orchard?
Yeah, actually, like I said, if you look at the price gap between outside Central region and rest of Central region, we are in one of the narrowest gaps ever in history. And of course, the government also has their plans of bringing population to the core Central region. Now, if the government has this plan and the government looks at the whole picture in its entirety, definitely they are making plans for people to be able to come in. And I would say this later on in another video, that the government has overcome 3 problems in the core Central region today. Firstly, is a price gap lah. And the price gap, as we can see, today's new launches, the price gap between other regions and the core Central is very close. So what it means is those people who buy in today and they upgrade tomorrow, they will get to go into the core Central region. Secondly, the government has to overcome the product issues that a lot of people face when they go into the core Central region. So for the longest time, people didn't dare to buy because, the small boutique developments, people didn't like it. There were no infrastructure, there's no schools, there's a lot of things missing. You don't get a heartland feel right in the center. And this was one of the things that the government had to deal with. And guess what? They are already dealing with it now. And finally, the big picture coming together, they need to bring this whole demand right into the center so that when there's more demand, prices can stay sustainable. If the demand is not coming into core Central, then people are not going to go, and people are going to think that, if I buy something in Orchard, firstly, I cannot afford. Secondly, I might lose money and this kind of thing. So I think as we see things progressing, as the government is moving more people in, I can see that dream of someone staying maybe in Punggol or Pasir Ris, coming to Central, becoming a closer reality.
Makes sense. And generally, price-wise, Ernest, 2,900 to 3,000 PSF, right, has been accepted in the rest of central region as the very common price. So weren't these prices the price level in prime locations like Orchard, River Valley and Bukit Timah just a few years ago?
Yes, actually, you think about it. Some people, nowadays you see a lot of agents advertising core central region price at RCR prices, rest of central region prices. That means, so what we've seen is, if you look at today, what are the new launches selling in, let's say in Grand Dunman, some units have already crossed the 3,000 PSF mark. Emerald of Katong, they were hitting like 2,009 to 3,000 PSF. Even Chuan Park Chuan Park is like, OCR, and they're going quite near the 3,000 mark. But at the same time, we see things in Orchard still stuck around the 2,008 to 3,000. So I would tell someone, okay, if you want a first mover's advantage, if you can foresee what's going to happen in the next cycle, when this group of people upgrade, wouldn't you want to take the first mover's advantage today to go into the CCR so that you can exit when this group of people upgrade? And this is something which I think if we can see the price gap narrowing so much, this is the opportunity that we can see I see in CCR today.
Makes sense. And in pricing as well, in terms of investing in property, right? We have always been taught with regard to property investment that the number one crucial thing is location. So is it really that straightforward, or is that something which is missing in order to maximize the profits?
Okay. I mean, like, those days when we used to go for property seminars, property courses, I think back 10 years, 20 years ago, these gurus it was quite simple those days. They would tell you property is about location. Okay, I did a check before just a few days ago, and it was quite surprising because, let me give you an example. Back in 2020, I was serving this client, this family. They had $1.8 million to invest. And so that in that time, $1.8 million could get you a one-bedder in right down in Marina Bay, just beside the MRT, downtown, right? All the high earning professionals, they can rent from you. Or the second choice is go to somewhere heartlands, not even near the MRT, somewhere like Clementi, buy a three-bedder. So there are two options. Now, of course, looking at all the dynamics of the market and thinking of the exit strategy, I told them, go to Clementi, get a three-bedder there because the exit strategy there sounds more viable. And it's true. And when we fast forward today to 2024, actually, I saw a unit transacted, a one-bedder that was sold for 1.81 million in 2020. Today, the owner actually sold for loss, about a $260,000 loss. He sold it at 1.5 plus million. It's quite sad. But my owners, my clients who actually bought something in Clementi, a three-bedder for 1.75 million, they actually exited at 2.33 million. That was like a $580,000 gain. So as you can see, it's not really about location, but there are a lot of other factors. And this is also how I help my clients evaluate a property from the macro perspective right down to micro. We look at the quality, we look at the entry price, and we also look at the exit strategies.
Very nice. And we have heard people saying that some properties don't make money. Can you give me an example of such properties that don't make money?
Yeah. I think I just mentioned one of them, that it was something like a one-bedder in downtown Central. I don't want to mention the project, I mean, not very nice, just in case, someone who's listening owns a unit there. But actually, if in reality, you can see, if I want to drill down to that, you can see that a lot of units there, the owners actually liquidated, and because they found that the prices were not going up. But generally, in the market today, we got to be one of the classes of properties which I see that they don't really make a lot of money are the one-bedroom units. I think simply because, not to say that one bedroom you cannot buy, you got to have a different strategy to buy a one-bedder. But if you're thinking of having a short-term outlook for owning a one-bedder, you got to be careful because you got to make sure that location is pretty good. Otherwise, and your entry price is reasonable, because one-bedder value is tied down to the rent they can get. If you get a one-bedder and get a 4.5% yield, then you are safe. The value stays. But if today you enter in a one bedder and you're getting only a 3% yield, the next guy is going to buy from you will expect a 4% yield or higher. So this next guy is going to press your price down. And so this is what I would say, like a certain category of properties that if you buy and you have a wrong outlook of the property, you will lose money.
Makes sense. And for projects, we know there's always that debate about MRT, non-MRT, right? So if I come across two projects, same neighborhood, all right, one is near the MRT and one is a 20-minute to the MRT. The price difference was unreasonable, say nearly 500,000 per square feet, which would be a better choice.
Okay. So I think what you're looking at is probably what you're asking about is about that price, the location versus not so good location, good location versus bad location. There's no bad location in Singapore, actually. Okay, let me give you an example. I was doing this study on the West. So we get this project called Jayden. It's quite near the MRT. Today they are selling at around a 300 PSF price difference with another project that is further out, 20 minutes to MRT called Sora. Now, if you ask me, should you enter Jayden or should you enter Sora? Of course, again, there are the emotional aspects of buying. There is also the logical aspect. If you think that Jayden will fit your needs a lot, then by all means go for Jayden. But what I was saying is, if you have if you're looking for something that is lower risk, something that you think you have a more investment element inside your decision, then sometimes it's worth taking the risk, not really risk, but worth taking the plunge to go for something where people don't commonly accept. And why I use the word risk is because if you bought a property in Sora and you went to office tomorrow and you tell your colleagues, I bought a 3-bedder in Sora for investment, you're going to get panicked because everyone's going to tell you that place has no MRT, that place is dead, that place has nothing going on there. But in actual fact, if we look at the past cycle, we've seen properties that are far away from MRT. Because the entry price was lower than another one that was near the MRT, they actually made a lot more profits.
This makes sense. And in terms of, timing as well, also very important, right? So is timing the entry important, and when is the right time to enter the property market?
Okay, some people would say it's better to have time in the market rather than timing the market. Right? Actually, because we don't have a crystal ball and we don't know, there's a lot of macro events that can happen around the world that can affect the prices. But one thing we know right now in Singapore is a unique market. We have got so many external shocks coming in, COVID-19, we had the SARS, and through all this, we didn't see the prices drop actually. So I would say if there is a right time to enter the market, I don't want to sound so cliche, but actually the right time is now when you can afford. Because if we try to time the market, we try to delay it by 1 year, we try to wait for a downturn to come. Firstly, I would say likely that the downturn may not happen. But secondly, it affects us more personally because the longer you wait, the shorter your loan tenure, the lesser loan you can take or the higher installments. So it will hit you more than it will hit everyone else. And if you have a certain pile of money that's set aside for property and suddenly you start spending all of them, then it's only to your loss that you waited and you didn't enter straight away. So I would say in Singapore, now is a good time.
And what exactly is driving up property prices? Are Singaporeans that rich?
Yeah, actually, a lot of people are saying, hey, property prices now are all-time high. Is there going to be a crash? But people, and a lot of people I speak to, they have this perception. I don't blame them. I mean, if we don't know the underlying factors that are pushing the market up, naturally, we will think that everything that goes up has to come down. But the truth of the matter is Singapore is going, we have a lot of underlying push factors that will bring the market even higher than today. And what I'm saying is, these are a few considerations I will always share with people. Firstly, the supply and demand. If we dwell deeper, we will realize that the supply in today's market cannot meet the demand that's coming in. That's number one. Secondly, Singaporeans, today the income is so much higher than the property prices. That means the GDP. If you look at a report from I just look at a report from UOB, the income levels are so much higher, and in fact the gap has widened so much since the 1970s. So because of that, people can even if there's a downturn, even there's a COVID-19 downturn, people can still afford properties. And thirdly, there was also another chart that I saw from a UOB that today, Singaporeans have one of the highest level of liquidity in terms of cash deposits and their CPF savings. Now, this means that they have the means to put a down payment for a very high quantum property. So if you think that there's anything that will affect the market, if you understand the underlying factors, the fundamentals in this market, you will find that this market is very strongly supported. And I forgot to say one more thing that's very important. From the period of 2011 to 2013, we saw a lot of cooling measures that came in. And these cooling measures actually causes, the government actually foresaw that the property prices could inflate. But they threw in all these cooling measures so that our property prices were really going in alignment with the income that people made. So because of all these things that have been put in, because of the demand and supply and the affordability, we find that, hey, Singapore prices, I think the only way is to keep going up.
Nice.
That's my opinion.
And it seems like the market currently right now is in a frenzy of emotional buyers snapping up units even up to 3,000 PSF in Toa Payoh. Is there a bubble forming in the property market?
Yeah. So it goes back to the fundamentals of the market again. I think it kind of speaks of how strong the whole economy is and how Singaporeans have accumulated so much of wealth. Because you see the whole property wealth building mechanism in Singapore actually starts when you buy your BTO. So you see when you at low salary, you just got married, the government actually helps you to buy a BTO. And if you are below 14,000 income, they actually give you CPF grants. So that is where the wealth creation has started. And when you sell your BTO, for sure you will make a lot of money lah. It depends whether you make 300,000, you make 500,000. It depends lah. But the fact is, people who sell their BTOs, they have a whole lot of liquidity. I even did a calculation for someone, for example, someone in Clementi who bought a 5-room flat for 500,000. By the time it gets MOP and they sell it for a decent price, they could have a capital or a down payment capability of about 900,000. Now, if I've got a down payment capability of 900,000, and if I'm in my early 30s, I can take a 30-year loan and household income is 20,000. Guess what? 900,000 down payment with a $2.1 million loan, I can easily afford a $3 million condo. And so you can see that even from the start of it, from how the government encourages people to build their wealth through property, you can see how wealthy Singaporeans are, even when they are still young.
Makes sense. And it also very important, in terms of like mention about BTO, right? So it seems that my HDB price has gone up and it's still going up. So how do I anticipate the best time to sell and buy to optimize the profits?
Actually, if you talk to a lot of HDB owners, I always ask them this question lah. If you own a HDB, was it a BTO or was it a resale? Now, before COVID, we also ask these questions, but then we give a different answer, because those who own BTOs, okay, they'll be smiling at you lah. But those who own a resale and they bought a resale way before COVID, they won't be smiling so much, because a lot of them would have realized that their property prices were stagnated, or some of them were decaying, and a lot of these people who held it for more than 10 years likely could end up in a negative sale, and they couldn't do anything. And what I mean by negative sale is, if you sell already, you got no money to take lah. Everything goes back in your CPF. Now, after COVID, this group of HDB resale buyers, they can smile at you. Why? Because they will say, hey, my HDB went up by 200,000, 300,000. But the question we really want to ask is, how long can this trend keep going? Because in reality, the common perception of HDB is the lease is decaying and the prices are supposed to stagnate or even drop further. But what happened in COVID? So what happened during COVID that caused prices to go up? If you remember, during COVID that time, everyone who wanted to buy a BTO, the government said you have to wait 7 years. My gosh, 7 years. I always joke, if your kid is like primary 1, by the time you move to your BTO, he'll be in secondary school already. I forget it lah. I just go for resale. And so what happened? The whole market, everybody just dumped their BTOs and went into the resale market. And if you got like 10 people trying to buy one unit, obviously the unit price will keep going lah. And sellers can see this, they will start jacking up the prices. And that was what happened during COVID and after COVID. But is this trend still persisting? Because I'm going to talk about it later also, if we look at some of the articles today, government is pumping in like 20,000 BTOs every year. You're going to, in no time, you're just going to see this oversupply happening in the HDB market. And then what will happen to prices? Will they start stabilizing and stagnating?
Yeah, interesting what the future of property is for Singapore as well. But currently in today, if I enter at such high prices, right, can I still sell with a profit in years to come? And who can afford to buy from me? I think that's the question on everybody's mind.
Yeah, actually, today, I mean, if you ask everyone, like, okay, I'm going to buy a 3-bedder for 2.5 million, I need to sell it for 3 million to at least make a $500,000 profit. But who really can afford to buy from me at 3 million? Can people even afford it? Okay, two things. Firstly, again, if you go back to the chart where I saw from UOB, where they were saying they drew actually a chart of the national GDP versus property price index from 1976 till right about 2003. We could see property prices hover around 300 to 1,000 PSF. Now, even during that time, it was cheap, but a lot of people didn't buy a lot of properties. Why? Because they couldn't afford. Fast forward to 2014, we find that the income levels have gone up way above property prices, and you see that the gap has widened and widened until today is at the widest gap. Income versus property, not a bad thing, the positive side where income is a lot higher than the property prices. Now, because of that kind of scenario that we are in, people have a lot of affordability. I mean, 2,005 PSF to 3,000 PSF, not a problem. But the other second thing which I want to highlight to you is also, I took a real case study of, like I mentioned before, someone who bought a 5-room BTO in Clementi. Now, if you bought it at $500,000, 500,000, today a 5-room at Clementi could easily go for 1.3 million. I think 1.3 is also a bit conservative, maybe because 4-room flats in Buona Vista are going at 1.2. So let's take 1.3. Now, I did a calculation for this guy who bought at $500,000. If he sold it at MOP, he would have gotten a cash proceeds and CPF proceeds of about 900 to 950,000. And these guys are still young. They are still probably in their 30s. They can take a full 30-year loan. And if they are working in pretty decent jobs, 10,000 plus 10,000, husband and wife, household income of 20,000, they can easily take a $2.1 million loan or even higher. Now, for $2.1 million loan and $900,000 in down payment, can they not afford a $3 million property? These people, and these will form the group of buyers who will buy from you next round. When you buy at 2.5, they will form the buyers at 3 million. So there are a group of buyers who can buy from you in future.
I think there always will be, because that's what always on people's mind, but there will always be people. And that was part 1 of the GrowCast Show, episode 77. I will be back with part 2 real soon. See you in part 2. And welcome back to part 2 of the GrowCast Show, episode 77. I learned so much in the first part of this show, and I can't wait to dive deeper into part 2. And jumping straight into it, Ernest, if I had $2.8 million to invest in a property in Singapore, should I be looking at buying 1 large unit or 2 smaller units?
Yeah, okay. I always tell people, the previous cycle, people were looking at sell 1 and buy 2. But this is what I always tell people today. Things have changed a bit. And looking at what just a real case study of what happened in just a few last year, how I managed to sell a 3-bedder for a really good record high price. We came up with this concept, and this is what we see consumers are looking at today, that if you have 2 small units, two bedders, the people who are going to buy from you are going to be investors, right? And how do investors buy? They usually push your prices down because it's all about the numbers, right? So if you're going to have 2 small units, you're going to sell to investors. These investors who buy from you are going to look at numbers and you're going to push your prices down. But if you have one big unit, one beautiful big unit that is like, wow, facing like, unblocked views, you choose a really beautiful unit. And guess what? When it's time to sell, be it like, after you get your keys or maybe 1 or 2 years after that, you will find that a lot of big units, people who buy, they buy to stay. And if you need to flip it or you need to sell it, guess what? You'll be the only one selling it. Or rather, you'll be the handful of guys selling it versus like the small units. There'll be a whole chunk of them like in Property Guru, right? So because of that, if the supply is low and the demand is high, who calls the shots? Who can sell? Can you sell at a better price? Can you get a buyer to buy at your price rather than you go down and meet his price? So this is the concept that I teach people today. If you got 2.8 million, you can get a very sizable, a very good, I call it a high value unit in the market today, which I think is kind of a no-brainer that next time the demand will be there.
Very nice. And with regards to new launches as well, right? With new launch prices creating record highs, are resale properties really the cheaper alternative? Is there a risk of overpaying?
Yeah, okay. A lot of people have this concept that 2005, 2008 BSF is just ridiculous. Before they even analyze the market enough, they're just rushing in to resale properties. Now, if you're looking for and if you're going to buy resale, I would think that you're going to buy something for own stay. You're going to buy a 3-bedder or a 4-bedder. Now, today, if you go and look in Property Guru, you look at what listings are available, you will find 2 kinds of properties there. One, when you look at the price, you will smile and say, hey, this is not bad. This is like kind of like market value. That's why I'm looking for something that's cheaper in the resale market. But when you go and view the unit, you find that it's probably a low floor unit. It's less than ideal kind of unit. And it's something that maybe something wrong with the layout, maybe something not right. And you look at it and say, oh, it's not suitable. But then you scroll again and you see, hey, this really, really beautiful unit. But then when you look at the price, your head turns down. But that's a reality in today's market because a good unit, if I'm the seller, there's only so few good units in the market. Am I going to sell it at market price or am I going to sell it higher than market price? But if I've got a low floor unit that is less favorable, how do I get it to move? I cannot be asking too high. I'll just sell it at market price and move on. So this is the reality that we see in the resale market today. If you're willing to pay an extra 100,000, 200,000 cash flow valuation, by all means go and get a good resale unit. But you got to ask yourself also, will the banks value it at your purchase price? Will you be coming up with a lot of cash flow valuation to pay for that unit? So if you want something that is safer, something that you are entering with everyone else, then maybe the option is quite straightforward. You buy where everyone is buying at the same time, and this you can only find in new launches. Now, when you launch together, people are buying at the same time, people are buying around the same price, and banks will match your valuation anytime. And I think this is something which I tell people, but people have to understand the whole market dynamics before they jump into conclusion that resale is actually cheaper than new launch.
Makes perfect sense. And recently, Ernest, someone shared their frustration when searching for a 3-bedder unit in the resale market. If the unit is decent, it is overpriced. Yeah. If the price is decent, then it's either a low floor or bad orientation. So how does someone overcome this problem?
Yeah, like I said before, I mean, this is reality. And it's always a willing seller, willing buyer kind of market. If you are willing to pay that extra, I would say if you want to go for that kind of resale property that you love so much, I mean, it's not a wrong thing, because sometimes family requirements are more important than just looking at profits and all these things, right? So the school is there, like your parents live around there and you work around there, you just need to get a property. So I would say get a good property, because get a good unit. I mean, if you can afford it, go for it, pay a bit more, get a good unit. Because why is this important? Next time when you want to sell, you will find that the good unit, you have a chance of asking for a higher price, and it will be a bit more liquid, or rather it'll be a lot more liquid than the unit that is not so good. Now, I'm taking this from an example that I've seen in one of the developments that I've been bringing some buyers to. I noticed that this development was facing the Bedok Reservoir, and there was this particular unit that was really beautiful. I mean, when you open the balcony, you could just see nothing there but just the lake, the reservoir. And that unit was asking at 200,000 above every other similar unit in the development. And guess what? That unit got sold first. So in today's market, people who have the money, they will go for the good units. If you want to go for a resale, and if that is where you think is best for your family, then I would say by all means go for it. But if you can afford to pay an extra cash flow valuation or above valuation for the unit.
And why is it, Ernest, that why do some families rather rent and wait for their new launch to complete instead of just getting a resale and then they save money on the rent?
Okay. Again, if you want to buy a new launch, obviously today you have to rent. There's no two ways about it. If you are trying to look for a new launch that's going to get their keys or going to TOP in a very near future, I'm sorry to say, but you may not get any units available anymore, because everyone is thinking the same. So you either get it before and rent, or you don't get anything at all. Now, why is it worth renting? Because if you look at a new launch and a resale, they're actually, if you look at the cost, and I always tell people, before you just think about the gross profits, think about the cost and see how much you're taking back. So there are a few components when we look at the cost of owning a resale and a new launch. So firstly, I always look at the loan interest. And if you take an example of a $2.5 million property for a new launch versus a $2.2 million property for a resale, the 300,000 difference, you'll find that in a new launch, you could be paying slightly more than half of the interest that you're paying for resale. Now, that's a bit of savings. There's quite a lot of savings. So in this case, you might be paying $150,000 in loan interest for the resale, whereas for the new launch, you could be paying around $80,000 just on loan interest. Now, and the next pillar that I'll look at is the maintenance. Now, you own a resale, you got to pay maintenance straight away. And the older resales, the maintenance are not like particularly cheap. There's a sinking fund and all this. So maintenance can be quite high. But a new launch, during those 3 years of waiting, there's no maintenance. And then if you look at property tax, of course, in a resale, you have your property tax can come up to about like 700-800 a year for a 3-bedder. But for a new launch, there's no property tax. And of course, the stamp duties, they are there. But what I'm saying is this. One more thing I forgot. Now, when you go into a resale, of course, you have to spend a lot of renovation. Depends on how well you get. But even if you got a well-renovated unit, you may not like the renovation. So end of the day, what I'm seeing is people are spending like 6 digits, 100,000 at least on renovation. So now, whereas for a new launch, you're going in and you're just spending very minimal. Put the curtains, put the lights and all these things. If you're going to spend that 100,000 on renovation, and here's what I tell people: if you're going to spend 100 to 150,000 on renovating an old unit, why not spend that 100 to 150,000 renting? And at the same time, at the end of it, you are moving to a brand new unit. Not only your unit is new, your facilities are new. People are, and your entry level is same with everyone else. Whereas going for old unit, you spend 150,000 to beautify your unit, but the moment you step out of your unit, facilities could be old. You may not be happy, and that's beyond your control. So that is why I think if you can look at it in this perspective, then why not take that renovation money and just go and rent and buy a new one?
That's a good way to look at it as well. And agents keep telling me that new launch can make more money than resale. With the current high PSF prices for new properties, how is it a better value than the older ones?
Okay, a lot of agents will say, "Hey, buy new launch lah. Just buy and you make a lot of money." But like I said, I just want to. I usually like to drill down into the cost involved of buying a new launch and a resale. Like I mentioned just now also, there just not to forget, there's a loan interest, there's the property tax, there's the maintenance, and we got to balance this out. And net, I've calculated if we bought a new launch for 3 years, a big unit, a 3-bedder, versus an old resale for 3-bedder, counting all the renovation costs, it's surprising that even though I have to rent, I come up with a net of at least 150 to 200,000 net profit for a new launch versus a net loss of about 100 to 150,000 for a resale property. And that is why I think in that sense, I would say the new launch can make you more money. But I want to move away from the profit for a while because we want to look at next 5 to 10 years when the property that we choose today, we probably will sell it in 5 to 10 years time. Do you know that that when we buy a new property, the new properties are improved version, an evolution of the improvements that URA has been doing in the guidelines, the design guidelines of livable spaces, right, in condos. So when we buy something that is good today, wouldn't it be easier to sell in 10 years' time because the current consumers have high expectations of good layouts? And if we're going into a good layout today, wouldn't it be easier to sell in 10 years' time?
I totally agree with you. And what is your take on Lentor? Isn't it Ulu? I've heard agents pitch that we could get similar returns as much more matured neighborhoods like Tampines or Jurong.
Okay, Lentor is if you went to Lentor in like no need to be 10 years lah. 5 years ago you went to Lentor, you will see the big plot of jungle there. People who like greenery, they will like Lentor. But because of that stigma of jungle, of like far off area, sticks with a lot of people. But did you know that today the government has been planning a big transformation? And it starts firstly, and I always like to say the government has a 3-phase transformation. They do announcement. After announcement is the completion of whatever they're announcing lah. And then after that, they will build infrastructure. So let's take the example of Lentor. So they announced, I think quite early quite many years ago, that they're going to build the Brown Line, the Thomson East Coast Line. And they did, and they actually completed that whole line from Woodlands, right? And today that line actually extends right up to Bayshore. So this is the completion phase where you can see the infrastructure is there. Eh? But there are a lot of new townships along this Brown Line that is not built, right? And there's no way that the government will spend so much building an MRT station and when you go out, the MRT station is all greenery. There's nothing there. So the government has construction in stages. So what's happening in Lentor? Lentor is one example that they built the station. First they announced, then they built Lentor station, then they start selling the lands and people started buying and people started constructing. And that is where the birth of like Lentor and all the 5 projects today that we have in Lentor. But do you know that along the Brown Line, there's so many other plots that are still vacant that the government hasn't announced even any land sales yet. And there are definitely going to be a few HDB estates along the Brown Line, for example, in Springleaf and even further down in Mount Pleasant. And I always tell people HDB areas are area of wealth creation. So if you have a HDB estate that is going to be built near you, and in this case, near Lentor, there's going to be a HDB estate there. You can imagine the wealth that is going into the estate, and after 5 years, it's going to flow out. And obviously, Lentor by then won't be Ulu anymore. It will be, I think you cannot believe what you will see in maybe 5 to 10 years' time, how the area will develop. So I would say if you go in today, you are going in as a first mover, and the first mover's advantage is with you. And so I say, don't look at Ulu-ness today. Look at what will happen to Lentor in 10 years' time.
And for people who want to go into en bloc, right? So, Ernest, how do I spot opportunities with the en bloc market?
Okay. Yeah, there is a group of investors in the market today who say, hey, this new launch thing is like, I don't believe this new launch thing. I don't believe in renting, but I want to go for en bloc because I want fast money. It's a bit of I call going for en bloc a bit of a gamble because, okay, here's what I would say to them. Now, if you look at a development, the question we want to ask ourselves is how much do they need? How much does the developer need to buy from them? Now, let's take an example of a development today at market rate. Owners are selling their units at, let's say, 2,500 PSF, right? Now, and let's look at the nearest new launch that is beside them. What if the nearest new launch is only selling at 2,800 PSF, right? Okay, if I'm the developer, how much do I need to offer these guys so that they will sign my en bloc agreement and I can happily take this property away from them? What do you think? Something around like 2008? I mean, because I can easily sell it on the open market for 2005. Why do I need to go through this hassle of en bloc if I'm not going to get a really fat paycheck, right? So I'm going to ask the developer, give me 2008 lah. Now, if I'm the developer, I buy from you 2008. How much do I need to sell it for later when I, develop it? How much do I need to sell it for me to even make a profit? Because as of today, all the new launches around are selling at 2008. With all my costs, I got to sell at probably 3,000, 3,001. Now, does that make business sense to me? So the question I'll ask is, today at open market rate, how much are you selling versus how much the new launch is selling? If the gap is too small, then can forget about the en bloc lah.
Very true. And there was an article in CNA on 16 January 2025 that mentioned 102,000 BTO flats will be launched into the market. How will this affect HDB prices in the near term?
Okay. Now, it goes back to the HDB issue. Like those who bought the HDB slightly before COVID, they will be smiling because they will see a gain, some even making 200,000 to 300,000, even if they bought old resale flats. Now, this again was because of the surge in young families dumping their, I wouldn't say dumping, but just not going for their BTOs, but going for resale flats. But now the government has seen this problem, and obviously there was a huge undersupply because there was a manpower shortage during COVID, right? People couldn't build. So now what they're doing is they're replenishing that supply into the market. And the government understands the only way that they can control prices is by increasing the supply. And so 102,000 in the next 5 years. So let's do a bit of projection. Now today they sell the BTO. Today is 2025. Maybe they take like 2 to 3 years to build. 2028. People move into their BTOs in 2028. They stay for 5 years. 2033. Now, will you be seeing a huge influx of like resale units into the market by 2033? Now, then the question is, by that time, by 2023, can your HDB prices keep going up by then? Because there'll be so many units flooding the market. And do you think that you still can get this kind of returns like what you got in the last few years? So I would say just be aware of the supply and demand that is coming into the market before you think that your HDB can keep going up all the time.
Makes sense. But generally, Ernest, HDB prices rose by 9.6% in 2024. It seems my flat can still appreciate. So what would be a good time to make the switch if I'm looking to upgrade?
Yeah. Okay, so good. 9.6% it makes a lot of people happy. It's good also because it helps those who got stuck. They can actually take out some cash from their HDB. But I would say, if you're just looking at your HDB prices and looking how much you can make, I think that's a bit, you're not looking at a bigger picture. Because if you want to upgrade, you got to think every 1% increase in HDB, does that equate to a 1% increase in the private property price? Because if your HDB is like 900,000, 1% increase is 9,000. But if the condo you're going to buy is 2 million, a 1% increase is 20,000. So you got to think again. If you still want to wait for that extra 2 to 3% from your HDB, are you going to miss that extra 2 to 3% increase in the condo? you could get priced out. So I would say if you want to sell, if you're ready, do it now. Do it now. Switch over while you can and ride on the uptrend that it's going to come because of the, like I mentioned before, the undersupply, the affordability, and the government's plan for the whole property market.
And Ernest, if HDB prices keep going up, will condos also rise in the same percentage? It seems like if I sell high, I will also buy high. So what's the solution?
Yeah, it kind of doesn't make sense lah. If you say today I'm gonna sell my HDB at a very high price, or even if I have an old condo, a resale condo, I'm gonna ask for a very high price, but then I get jammed halfway because I say, hey, if I'm gonna sell high, I also need to buy high, because it can't be that, I'm greedy, but then another guy is generous. It doesn't happen like that, right? So where is the opportunity? Of course, we're going to look at how sellers behave. Now, if you as a seller, you are greedy, you have only one unit, and that's so much you can make. You want to make the most out of it. But let's turn it around and let's look at the people who have to sell a lot of units. And who are these people? They are the developers. They got a lot of units to sell, and they've got a deadline. But obviously, I mean, some of the developments are selling very fast. But as a developer, end of the day, you still have a lot of units to sell. Can you? And you have also a lot of competition. You have other developers who are fighting for the same pie of buyers. Can you, as a developer, sell your units at unreasonable prices? Likely you can't. So if I would say, if you can be greedy now, you want to sell high, you can also buy from a developer at a reasonable price. Not buy high, but buy reasonable.
Very nice. And Ernest, I wanted to ask you, before you entered the property market, right, what were you doing prior to entering the property industry?
Okay. I'm a mid-career kind of switch kind of guy. I was in telecommunications. I was doing like kind of some regional work, regional sales, that kind of thing. But of course, my industry was consolidating at a certain stage of it. And so I was actually lost my job a couple of years back. I mean, quite about 10 years back. And so at that point of time, I thought to myself, hey, maybe this is a good time to try something. And I always wanted to do something for myself. So I thought, why? And I tried some other businesses like F&B, but high capital and high risk. And property was one of another way of doing business. Low capital, not to say zero capital, you have to spend on marketing. I tried it, and I found that it suits what I wanted to do. I have an inclination to help people, and at the same time I want to earn some money from doing that. And that was how I made the switch. I was kind of like thrown off the cliff rather than I made that conscious switch.
And for yourself, how did you decide to make the mid-career switch? Was it challenging? Did you have second thoughts?
Yeah, it was challenging because from getting when you're salaried, all you think about is that 24th of that month, and then you check your bank account and there's money coming in, right? But when you have switched over and there's no salary coming in, there's no 24th or 25th of the month to look forward to. There's only fighting and hustling for the next client, getting that whole thing delivered and getting your whole job scope done properly, giving excellent service so that they will refer you to other people. So there's this whole shift of mindset when I came in, and I would say it was a positive shift.
And for yourself, right, what keeps you motivated every day?
Yeah, if there's anything, I would say that this is one of the things that I like to do. I enjoy doing. I can, of course, there are days where things don't work out well for you, and this is what people always say. You can only cry or drown in your sorrows in this industry for 1 day or 2 days, and you got to consciously get out of it. You just have to jump out of it. And if those things happen, I'm very conscious of where I am. I will try to do something to overcome it. But in the bigger picture, this is what I really like to do. I like to meet people. I like to talk to people, and end of the day, help people. And the best thing is you get paid for helping people. I think that keeps me going and keeps me working. I can work 8-10 hours a day without even complaining. I love it.
Very nice, very important as well. And Ernest, I've been told that developers will stage up their prices as the project gets sold out. So today, if I like a particular project, but it's already 70% sold, can I still enter and have a chance to profit?
Okay, it depends on there are a few factors that come into this play. I know that some people, you may like one particular project, you may have a lot of emotions to a particular project, but this is where I come in to help you to analyze and to see if there's future demand. But we have to look at the whole thing in its entirety. That means we look at the demand, the future demand from people. We look at the entry price. We look at the exit strategy. So what I mean by entry price is some projects, they may be 70% sold, but the developer didn't do a lot of staging up. For some reason, they didn't do. And there are projects like that in the market. But some projects, and it also depends on the developer, because we know what I've seen is a lot of big-time local developers. They're not so crazy about staging up, but they do a bit of stage up, but in reasonable sense. But there's some developers who are some foreign, like China developers, they are more aggressive in their staging up. And this is what we have seen in the past cycle. And this is where I would give my clients advice to say, okay, this project, look at the differences between now and day one. Other projects, if the differences are small enough, I think we can still enter. But if the differences are too big and you think that the upside is no more, then I would say, hey, let's skip this one.
Makes sense. And high-rise projects like Alta and Ori with up to 40 stories, the same 3-bedroom price, the difference can be 200,000. So is it still a good investment?
Okay. Now, this goes back a bit like today, if a guy at level 5 buys like $200,000 cheaper than me, but I bought at level like 35, that kind of thing. Okay, what we've seen in the last in this quarter, Q1 of 2025, we have launched a couple of projects which are this kind of tall, very tall projects like Alta, 40 stories, Ori, and these kind of projects, you will see this kind of price spread. I call them the spread. But obviously, I mean, not everyone gets to go in and buy like level 7, level 8, 9, 10, those kind of floors, right? It depends on your ballot number. But does it mean that if you don't get a good ballot number today, if you have to enter something like level 25 or level 30, does it mean that you cannot make money? If we take a reference to another project that was launched in 2020, I call it that project was called Clavon. We can see that that someone who I got an example, someone who bought a level 26, he still managed to make a very, very decent profit of more than about 550,000. And a buyer who bought a level 8 made slightly more than him, but I would say even at a high floor, he could fetch his price and he could still make the profit. Now, why is this so? And this also depends on the demand that comes, the type of unit that you have and the price that you enter. Because it also boils down to the 3-bedder that he bought, because when he wanted to sell it, the supply was very low. He could ask for his price. Again, it boils down to what type of units you buy, the big or the small ones. If you buy the big ones, when there's no units to sell, you bought at high price, you can also sell at high price.
Makes sense. And that was episode 77 of the GrowCast Show, and I learned so much from Ernest. Ernest, thank you for being with us today, and I will catch up with you real soon. Anything else that I should ask you, but I didn't ask?
I think you asked me too many questions already. I'm just like, I hope I was a bit of I hope my answers were a bit of a help to you, and also gave some value to this whole program.
Of course, thank you so much. And that was Ernest, episode 77 of the GrowCast Show, and I will see you all real soon at episode 78. See you everybody, take care, and bye-bye.